we're back. It's 8 o'clock, 2 a.m. New York time. We trade on New York time. So that trade I outlined just before I closed the first video did not work out, but we didn't take it because we only trade after 2. Okay. So I was interested in seeing a short opportunity set up here because I liked how these bodies of these two candles respected the high of this bearish 5-minute fair value gap. I thought that was quite clean, but it came up, and that's that. So now I need to introduce you to the entry model. So the entry model is essentially just the basic form of it is like boom, 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 boom. So it's 1, liquidity sweep, 2, market structure shift, and 3, entry. Target 2R. 2R is stands for reward, risk reward. So 2R, 2 times reward, 2 times risk. So we risk 1% to make 2%. Okay, so in the entry model, over here we have a sweep, liquidity sweep, price swept above this high. Okay, then we look at the last series of up close candles because we're looking to go short. And this is the last series of up close candles. We look at the open of that last series of up close candles, which is here on this blue line. So I'm waiting for a close below there. And then I'm waiting for a market structure shift, which is just going to be price breaking this low. It doesn't have to close below it, but it does have to close below this blue line. So it has to close below the blue line, and it has to move below this black line. Once that happens, right, because I mean this comes into our entire analysis. So it's closed below the blue line, that's good. Now I just needed to break the black. So this basically comes into our whole analysis we've been doing in the previous video where I want to go short. So if we look at these gaps, price is respecting it, and it's setting up our entry model here. Okay, so if we break there, we are going to look at the midpoint of this little leg here, and we look at an FEG to enter on that is near the midpoint. So we've got this tiny little one here. So I'm going to get ready to execute. So in EURUSD. Okay, so our entry would be 1 tick below that FEG. Stop would be 1.5 pips above. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Above there, and we'll target 2R. So go here, let's just change these colors, and we'll add the spread, 1, 2, 3. We're going to risk 2%, I'll explain that later. So that'll be 3.57 with a stop loss of 56, and then we will get ready to short. So we're going to short at that red line there. I'm risking 2%. Okay, we've sold. Okay, stop losses up there, this dotted dashed line. Okay, so we are in a short position right at the open. Feeling a bit nervous. Don't want to lose my first trade on video. Okay, so we are up $32 minus $10 commission is $46. We are risking $200. I'm risking 2% or $200 of 10,000 because my account is above 4%. So I want to sort of speed up the process to get to my 10% target for the evaluation. So I've risked 2%. Okay. So now we wait. It is in, so let's look at it here. My entry is here on this level at this time. Stop loss is here. And we're gonna take profit around here, somewhere here. Okay, so far it's not looking good or bad. As you can see, we added the buffer, the space between. Usually I put my stop just on this high, but I've added a bit of space there because that's to fix the issue of what was happening last year, where I was getting stopped out just before, just by a bit, and then price will go my direction. So here, if we look here, we do have this low to be targeted, and our final target is actually above there. So that's a good thing because it's closer. So I'm happy with the targeting here. So far it's going okay. We are at positions at an unrealized profit of $50 over here. You can see that. This is my balance. So this is the account balance prior to entering the trade. This is the equity. This is the unrealized account balance if I close the trade right now. So we want to get this to 11,000 basically. To get to 11,000, let's see. So we have, so it's 540. So 1,000 minus 540 is 460 divided by 200. So we need about 2.3 R. So if price can get to this level here, we would basically have passed the first stage of the evaluation. So far it's looking okay. I like how these did close above this 5-minute fair value gap, but by the way, this is the 1-minute chart. Each candle is 1 minute. You can see here's the countdown to the next candle. We got the entry model, got displacement, that's good. Yeah, it fits a whole bearish narrative. We wanted to go short based on the whole part 1 video. So it's looking okay so far. just delete this. We are in $100 profit. Preferably we want to see like some acceleration to the downside. I might consider taking like a partial profit here, maybe. We'll see. Okay, I like how it hit the entry and just went straight into profit. That's usually a good sign. Not always, you know, it can still lose. And if it loses, I will still share the video with you. Which is obviously harder to do, but sometimes we lose and it's okay. So yeah, I mean, it's going up a bit, you know, there's some nerves there. And then it's gone up quite quickly. So obviously feeling nervous. Psychology is a big part of trading, it's important. So I want to outline what I'm feeling and how I deal with that. You know, over the years, you know, if you see price go up like that so quickly, it's like, you know, I'm still scared, I'm still fearful and nervous. But as a beginner, you see that you'll probably want to close like immediately. But we just gotta let it develop. So maybe it's coming up to react to this. 1 minute fair value gap, potentially. We do need to be wary though that, listen, I can see how this could lose because we did sweep this low, displace to the upside, get a market structure shift to the upside. So I mean, I could see how I could lose. I definitely could see that. But our overall narrative is bearish. Sometimes in the day, even if the narrative is bearish and we are correct about that, sometimes, you know, price sometimes has to go up before it goes down, and sometimes we get in early and price goes up first and we lose, and then we get in later and we hopefully win that. So price may go up first, maybe my narrative, bearish narrative is correct and price will go down, but I might be wrong about the timing. So maybe price wants to come up here and then fall off. So we'll have to wait and see. So let's go back to the 1 minute chart, back in profit. So now I'm feeling a bit nervous. I have identified a reason I could lose. But I still stand by my idea who I could win. We have a nice entry model. The narrative's bearish. Premium. Now it just basically just comes down to timing. I'm pretty certain wants to come down to like sweep these relative equal lows and come into this daily fair value gap. But yeah, just hopefully we've got the right timing. The reason I think we may have the right timing is because there is news, US news today. Over here at 10 a.m. New York time. And that's in quite a while. So with the news usually comes manipulation, or what I like to call tomfoolery, which is usually like if you get in quite close to news and just before, you'll probably get stopped out just before price goes your way. So the fact that news is in the next session and it's in quite a while means we probably more likely to have the right timing here. But then again, sometimes the main narrative of the day is only followed at the news events, so price might just fuck around like until, which is over here, and then finally go down as expected. But yeah, so another reason I'm worried, not worried, but why I could lose also is because we have relative equal highs above here. So that could be a reason it could lose. But I like the entry model. If you look here, we basically came up to equilibrium of this little leg here, so that's good too. So I'm gonna stick with it. As you can see, we constantly, in the trade, we reanalyze, sort of kind of, refresh. Do we want to stay in the trade? Do we want to get out? Generally, you want to avoid getting out because of fear or staying in because of greed. Sometimes those are hard to avoid, but yeah, I'm definitely susceptible to getting out of a trade because I'm scared. But with experience, you learn to sort of handle it. So it's chopping around quite a bit. It's a bit of a mess here. Is currently in slight profit. I think the entry model is super clean because we got displacement length to the upside really clean, a series of bullish candles, a really clean series of bearish candles. So very clean model, nice displacement here. Price basically respecting the high of this 5-minute FEG. Oh, it actually did close above on the 5-minute, but I'm gonna stick with it. Currently in a bit of profit. So yeah, we just watch and think. out that it's just not kind of not going anywhere, but I think it's worth staying in for now. So what is quite nice here is that price reacted to this 5-minute bearish fair value gap, and you can see it kind of reacted to the midpoint of it. So that's pretty good indication that we may still want to go down. I obviously don't love that. We are in a loss at the moment, in the negative. Hopefully it reacts to this 1-minute gap in the orange block. Okay, so it closed below the midpoint. If you zoom in here, you can see it closed below the midpoint of that gap, so that's a good indication of bearishness. Doesn't mean the trade's gonna win or anything, but it's encouragement to stay in the trade. But for all we know, this next candle might close above this, so. Okay, so we got an immediate bearish close after the midpoint was respected by the bodies. It was not closed above, so that's good. Hopefully we get another bearish candle, get some displacement to the downside. Seems to be rejecting off the midpoint again. Midpoint of the 1-minute bearish fair value gap, which is the orange block. So it did reject off of it again on the just previous candle. It's not the be all end all indication that the trade's not gonna win or anything, but it's encouragement to remain in the trade. Still rejecting off that midpoint. Got a feeling it is gonna break above it. Okay. So decent, strong bearish reaction off the midpoint. That's good. It's very good. It's broke above the midpoint there. Hopefully it at least respects the high of the gap. And it's broken above now. So obviously it's not looking so good. Okay, let's hit the high where our stop would originally be. So trading last year, we would be out the trade. Looks like it's gonna lose though. Okay, so we've lost the trade. Okay. It's unfortunate. But wait, move on. Okay. I think I do still want to short. Maybe we react to that again. Just gonna hide this for now. So to get another entry model, we would need a close below here and a break below this black line. It seems to be reacting to this 5-minute gap. Yeah, so maybe we just got in a bit early. Just look at gold. So basically, if we were short again, it would be basically just the same idea, just basically be a re-entry. So this would likely be our entry. So we'll set that up in the meanwhile. Take a risk back down to 1%. Okay, looks like we will get a close here, so we can re-enter. We need probably to reach there at least to get that entry. We did break the black level, but we need to close below this blue line. Okay, we'll get ready to sell. Just waiting for it to reach the level so I can press the button. Looks like we might miss the entry. Almost there. Okay, we are in another short. Risking 1%, my stop is there at the dash line. Risking $101. Definitely feeling quite nervous after our previous loss. Okay, so not doing much at the moment. Just wait. Feeling very nervous. As you can tell, I'm less talkative, but I am going to trust the process. Looking pretty good so far. Got some nice speed there. Don't love that this candle closed with a big lower wick. Kind of shows bearish rejection, like it wants to go up, but we'll see. Up $50 at the moment. Our target is 200. So we're risking 100 for 2R 2 times the risk, which is $200 profit, which will basically just bring us back to break even for the day, which is okay. Hopefully we maybe get a one later on too, but yeah, hopefully this one does one. So far so good. Could maybe take partials at these levels. Let's see. Think about maybe moving my stuff to break even once this level is broken. Maybe. $65 profit at the moment. 70. See if we can break that black line below it, break below it. So far it's looking pretty good. Okay, we've broken that level. We may see a temporary move to the upside after that. Preferably we want to see acceleration past it and beyond it. Okay, that's good. Currently at $100 profit. Going for 200. Considering moving my stop loss to this high over here, because price reacted to that FEG over there. For now, do that. So that means we've locked in $22 profit. Let me draw that in. Stop is there. So our stop loss is now here at this red line. And hopefully we accelerate past this black line, like exactly like that. Okay, we want to get ready to close at 200 profit. Seems like it might be a bit further than anticipated. Hopefully we do get there. Okay, that's not great that it broke there and closed above. Some rejection. So that's not great. So maybe we take a partial. I think I've taken half off, half the position off. Okay, I've taken half the position off, that's $70 profit. So we took a partial here. Now we've got $10 locked in, $11. Well, 11 plus 70. Still think it's gonna go down to here at least. Okay, it's looking better. Because it may reverse off of this level, I'm going to trail my stop quite aggressively down to this high. So that would be $56 locked in, plus our 70, that's 130, 1.3% locked in. Okay, let's see if we can get a bit more out of this, down to this level. because if we can close with the 130 on this, we'll get our full 2% anyway. I definitely think this is a target that price can go to. So I will close at this level, this black line. Okay, almost there. Okay, there we go. So we closed with let's see, 69.7 plus 121.8 minus 2.55 minus 2.52 for the commission. So that's a 1.86 R trade. 1.86. So 1.86, basically 2.1 minus 1.9, 0.2. So we are down 0.2 for the day. Okay, so we've almost made all our loss back, so that's good. This was a nice winning trade. Happy with that. So my next trade, because we are above 4% on the account, I'll risk 2% again, unless I'm not super confident in it. So let's see if we have anything that might set up here. So that was a really nice trade. Didn't go into much drawdown and then just kind of went down straight away. Pretty clean. That was 22 minutes. Bit of a scalp. Kind of 14 pips. 14.3 pips. Do I see another trade coming? At this point, there is kind of an entry model here. There's a sweep. There's a change in state of delivery over here. Close below these series of up close candles. Price is closed beyond these bullish gaps, which means they are violated. Got a market structure shift. It's not super clean though. Prefer if this series of up close candles was over here, because generally I want it to be the leg that sweeps the liquidity, and the leg that swept liquidity here doesn't even have any fair value gaps in it. Okay, so that was good. I mean, potentially it could go much further, but we just target 2R and we are happy with that. We actually got 2.5 technically, so that's good. Yeah, so it counts back at 5.16%. Okay, so I think that will be part 2 for today.